Hello, this is Coach Mike. We're going to start getting through our focus group watch list. Um, you should have already received the focus group spreadsheet, so if you want to pull it up and go along with the video, that's fine. But if not, this video just kind of helps explain where I'm at with the focus group list. Now, last Tuesday we did our webinar on an Apple chart study, and I'm actually going to stick with that with how I'm going to be trading Apple. So far, we've studied the 60-minute chart. Thursday, I entered a strangle on that based on the Fibonacci's you see on the chart right now. On the spreadsheet, I didn't really post for a new trade because, as far as that study goes, it's already started the move. Now, in reality, you could probably find a good trade on a range break here, which would be about the time it breaks that 97.88. If it gets a good break above that, you use that as your support and you move on. But already in a strangle, might have to exit one side. But using the chart study that we did this past Tuesday night to direct that trade overall. Caterpillar, I really like the W Caterpillar made on its daily chart, and we retested it. The earnings were actually a beat, but there were some poor numbers in the earnings based on some stuff going on overseas and the high tax rate we have U.S. corporations. But I think Caterpillar has a good chance to hold this 104.03. You'll see on the spreadsheet, though, I actually put in a suggestion for a strangle. If you click the two different charts posted, one of them you'll see this daily chart where you see the W retest to explain the reason for a buy there. And if you look at the other one, you see this weekly chart, which shows after the big pullback the potential to hit this swing point about 99.50, 99.49. So the strangle might be more up your alley. I haven't personally done a lot of trading on Caterpillar, so I don't plan on doing a lot. CVX up next. I'm in a strangle here, although I took a tiny bit of profit already, even though the tiny bit of profit was more than what I paid for the entire position. So my calls are like a free share position right now. My tiny puts is a half position that's down, but they have earnings Friday morning. And we'll see what it does over the next couple days. There is a likelihood you see that Friday kind of pulled back and bounced off the prior swing point on your daily chart. There is a likelihood that you could get a run up into the earnings based on that. I just personally am okay holding my strangle into the earnings. I've got 816 130 puts and 920 135 calls, and overall I'm pretty happy with that. I'm really happy just holding that into the earnings, and really don't want to try to force a new trade right now on CVX. Facebook. This one's going to take the majority of this video. I posted a lot of potential trades, so I want to kind of concentrate on them here. Facebook had the big gap on earnings. If you click the first chart, you'll see it's a 15-minute chart. Why did I want to use the 15-minute chart as the focus? Because if you look at the daily chart, because of that gap, you have no support. Support's a long way down, but there's a potential that it could go up. So we have to identify what we could use as support until then, and that main value is going to be this line. The lowest close on my 15-minute chart, 74.97. And what I want to watch for that is a couple potentials. Now, those that are day trading Apple or Facebook, you'll see right here potential at the W. A W that could probably come back up into this area, get about $1 move, $1.50 move from the current price. Now, usually the place to buy the W would be on the break of the center, which would be this peach colored line here. One thing I would look at with that is if it opens up close to that line but holds that $75 or so price range, I don't think it would even be a bad strangle on the two weekly options I put there, the 77 call, 73 put. Now, I do want to say this. It's very, very difficult to anticipate the prices of weeklies. So even though I have, the 77 call, you might be able to buy it at 47 and the 73 put at 86. We won't know till we see it open tomorrow. So the point I want to stress is that if it's down right around that $75 price, you might want to take a strangle on the weeklies. If you're not really comfortable trading the weeklies, you'll see the third chart posted is from a 60-minute chart, the one that has the 816 $80 calls. You could also very likely enter a strangle off of that, where you're a couple weeks out, 3 weeks out. And then when you get into the daily chart, I've got two potential fib target areas. 82.64 or this 83.70. But also, if it were to pull back based off the same ranges, $70.51. So you see the last two trades on there are actually based on the strangle off the daily chart. Now, if you're looking to really actively trade Facebook, I would be looking at all of those as actually potential trades. I know I plan to look at all of those as potential trades heading into the upcoming week. So with Facebook, I think we could have some good trading on it, but it's going to be a little risky after that gap. We're going to have to trust our established support over the last two trading days. First Solar, I still think it's going to pull back down to that lower channel line I have. But, that doesn't mean it can't go up before it pulls back there overall. So what I got there as a trade is based off the horizontal line you'll see here. This close there, and I believe you would want to use that as a close below there to be your stop for the potential to retest this failed trend line. And value, I'm just kind of guessing, would be about 71.62. And I think you could go ahead with the September $70 calls, probably pick them up between 240 and 250. GLD actually had an opportunity Thursday to enter that strangle we talk about. Trade 2 months out, 2 to 3 months out on the 126 call, 122 put. When it gets into that horizontal channel here, if you had entered that on Thursday, your calls are up more than your puts are down, and that's been a very, very productive strangle play for those that have been trading gold. So I want to keep up with that until it shows us something different. Goldman Sachs, if it's going to pull back, I believe 167.82 is a reasonable area for it to pull back to. The proper options are going to be a little bit expensive, and you're going to see that if it were to go up 180.70 up here, those that may be interested in trading Goldman Sachs, right now the stop out points are going to be a little awkward. For puts, you really have to trade the evening star, which means the high of the star candle is going to be your stop out. And what I would look at with that is if we start downwards on Monday, I would take the puts play, but I would not be fearful whatsoever on any doubt that it might bounce to take the September 180 calls, and then based off the support of the Friday's low 174.72 or Thursday's high as a resistance point for that puts play, make your stop out of whichever one needs to be stopped out once it's there. Don't just wait for that to happen to buy the other side, because if that were to happen, whatever you would go down on the one side, you'd probably make on the other side. So it'd be important to hit that up as a strangle. I know they're going to be expensive. You're going to be paying between $2 and $250 per contract, and that's a full position for most people. So, with that, we kind of have to let that establish and, get rolling on it. I do think you may find a trade off the 60-minute chart, but I think it needs to set up first. So it probably wouldn't be until late Monday until you did that. You can trade that 2 to 3 weeks out pretty successfully, but I wouldn't jump into something like right away. Make sure you're trading stuff that you've thought out a little bit, because they did have a really big, nice earnings beat. So the strangle that I have listed on Goldman Sachs, honestly, for all the trades I reviewed for it heading into tomorrow, those two were the ones with the better risk to rewards, even though the risk to rewards on them aren't great. And that's why the strangle would be important, because the strangle, the reward side of both on the strangle, makes up for the risk side of both on the strangle. That's why the strangle is important. Not every stock gives you a good strangle trade. Not every opportunity gives you a good strangle trade. This one in particular, when you look at what the estimated risk is compared to the opposite side of the strangle's estimated reward, you find that you're in good shape should you get stopped out of the one, so long as you're in both. Lockheed Martin, we made the earnings trade last week. We shifted that over to 175 calls. It's a completely free position, but we're in all-time highs, which makes it a little bit risky. I've got a couple points, 171.28, and then up here 177.26 that I expect it may get to, but none of that is as important as it holding 168. If we close below 168, not just if it dips below, but if you get a closing price below 168, then you got to let Lockheed Martin reset and get ready for the next long opportunity. UPS is going to have earnings the 29th, pre-market. I wouldn't touch it before the earnings. Unlike most earnings, options are a little more inflated than I'd like to see on UPS right now, and it's because about a month or so ago FedEx had a decent move on the earnings, so that's kind of catching up with UPS. Plus UPS got really close to a longer term target I had on it, 105.54, but it actually hit that 105.08 swing point. You see it hit 105.09, which is that upper purple colored horizontal line. So right now for UPS, I would let it have the earnings and then, let it settle to find a trade on it. And then finally, Visa. I was expecting Visa to have better earnings than what it did. I was kind of disappointed myself. But I'm not going to be surprised if Visa gets a little harebrained here, up or down. I wouldn't touch it for a swing. We need to establish a new resistance and support based on the fundamental change. So that means, once we have another high point, if it's lower or higher, we'll kind of have a basis to go off of. And that's what I think we need to look for. So just kind of hang in the background on Visa. Don't pay it no mind right now. So look forward to the focus group list this week. Going to be watching Goldman Sachs and Facebook the most. And Apple's 60-minute chart. I really like that study we did last week. And we're going to continue that because of how positive the feedback was I got about Tuesday's lesson. So this Tuesday, we're going to be looking into a chart study on Apple's 15-minute chart. And we're going to basically break down all the different charts for Apple and find out what delivers high winning trade percentages on every different chart. I don't care how long it takes us, it's worthwhile. There should be no amount of time that you're not willing to spend for the opportunity to make money more consistently. So that's what we're looking at. Good luck this week. I'll see you in the chat room. I'll be there all week, so no worries there. And make sure you study up your focus group charts especially.